Hello traders, welcome to today's video. In continuation of the price action review and reading price, I would like us to resume where we left from yesterday, and we're going to be beginning with checking on Nasdaq on the daily time frame. So yesterday I was in long with Nasdaq. Those of you who can remember, I was longing Nasdaq from this point here, somewhere down here, and as you can see, I was stopped out, and that's what I want to talk about. What exactly happened here? And why did that happen? That is the primary thing that a trader should be focusing on. Once you hit a stop loss, or once you realize that something has gone wrong, the first scenario should be, what is the possible reason why that happened? That is how you grow as a trader. You don't just ignore and say, it's just a losing trade and so on. If you followed everything correctly, then fine. But even if you followed everything correctly, you have to ensure that, yes, I followed everything correctly. So I want us to take a look on why I was buying Nasdaq yesterday. I think I explained in the previous video, so I don't really want to go deeper into it, but just a quick overview. Yesterday was Tuesday, Manipulation Tuesday. We took the lows of Monday. We tapped into the bullish daily fair value gap, so I was expecting price to go higher, but I'm not the type of trader who waits for break of structure and so on for some reason, because my system doesn't really go into that. And as you can see, price kept on going lower and lower and lower. And I remember I bought actually from here. So my point of view was, this candle, actually I bought it from down here. I wanted this candle to close back in the way it did. So I was expecting a continuation higher. But there's something that I ignored. There's something that I ignored. And I ignored it with the fact that I just did not like the fact that price might be interested in going low. Like, I was like, we're going lower. Where are we going low to? We already manipulated the lows of the previous day, and even tapped the daily fair value gap, this one which I've marked here. But something that I ignored, first of all, was this order flow. You see this order flow? You see this one? Breaking these structures here. And this is not even actually the big deal. The biggest mistake, or the biggest thing that I ignored, that I came to realize later in the evening when doing my analysis and trying to see why did this happen. And I want you guys to know that during New York session, I sold Nasdaq, by the way. I sold. And I sold based on this price. I sold it from, I think it was, yeah, this opening here. I sold it from that zone and took some profit there. And this was the big mistake that I did here. See this displacement of this hourly candle. This candle literally displaced aggressively below the daily, bullish fair value gap. So this was like telling us something. And I remember yesterday telling you guys that I don't like this price action. Yeah, we were here. Yes, we were here. I remember yesterday telling us I don't like this price action, the way these 15-minute candles are kind of closing back in. I wanted something, I wanted an aggressive move that displaces, creating another fair value gap that is a bullish one, which will be contradicting the one that we had here. But now, unfortunately, that did not happen. And my stop loss just down here, and we ended up, losing it, which is fine. When I take a look at it in terms of, did I follow the plan? Well, yes, I followed the plan. My point was liquidity of Monday. Tap into that bullish fair value gap, then now start going higher. And for traders who often trade, who wait for break of structure, yeah, it's the safest thing to do, and I encourage it. But even so, this was still a very, very dangerous trade. This was quite not really a good one, especially going against the overall trend. And that's just it. So today, what do we expect? What's happening? We go back again to daily time frame. We start with the top down analysis and see what's happening with Nasdaq right now. And you'll realize that we are still very bullish. Some of you might be thinking now, because yesterday, price did all this, and then we're still, no. This was manipulation, guys. This was serious manipulation in the market. And I really don't understand what this market was looking for down here. I've been trying to look at it closely, and I'm like, what exactly? Because our primary target should have been here. And as you can see, it never really tapped it. It's now creating some equal, relative equal lows there, and some double bottom there. And which just means that there's liquidity also lying here. But I want us to take a look at this. The reason why I was buying yesterday and I'm still bullish is that if you take a look at this bearish fair value gap that we created on the previous week of 19th August, when it reached on 28th August, we closed aggressively above it. This is now how you read price. This tells a story, and this is now advanced price action because I want us to relate how we closed here and how we closed here. We have two opposing PDRAs here. Above, we have bearish fair value gap on a daily time frame. Below it, we have a bullish fair value gap on a daily time frame. So we have these two gaps opposing each other. This one is telling us to buy, this one is telling us to sell. So how do we balance this? We see how the candles of the daily time frame reacted to them. So for example, in this bearish fair value gap, we displaced above it, meaning that we violated this gap. It is no longer valid. And once we violate a gap, that simply means that price is interested in something higher. We are going up there. We are going up here. So for us to go up here, we look what PDRA below us that we can use to enter this trade as we go higher. And this was the PDRA, this bullish one. But unfortunately, what happened yesterday happened. Manipulation happens sometimes. Losing is part of the game, even if you do everything right. And you see it dropped us way low than what we really expected. But I remember yesterday telling you guys, I would like to see how this candle closes, the candle of Tuesday, 2nd of September. How it closes will determine whether we're still bullish or we're bearish. If it dared closed its body up below this bullish fair value gap, then that will be a total confusion. That will be chaotic because now we have one PDRA telling us we should be going high, it has closed above another one, and it will be just chaotic. Okay, but in this scenario, I want to take a look at how we really respected this daily fair value gap, and we did not close. We never closed even below the consequent encroachment. And this is why I'm telling you guys, we are still very bullish. Not unless we see a candle disclose, like violates this. And from the look of it, you guys can see we are creating higher highs, higher highs. Price is bullish. Okay, from the order flow over here. And now, when you go to advanced ICT concepts, for example, this fair value gaps, those are ICT concepts, of course, and maybe the smart money. The way this candle closed yesterday took liquidity over here, dropped, took traders out, and just went on dropping lower, but came back in and closed exactly at the consequent encroachment of this daily fair value gap. Guys, I want you to see how beautiful this price action is, despite of it, doing some damage down here that were really unexpected and uncalled for. You see how we respect this bullish daily fair value gap. This tells us a story that we are interested in going higher. So that being said, we should be positioning ourselves looking for buys. Now, my job is just to give you a market overview of how I read price action. Now it is upon you as a trader, because I don't want to do everything for you to grow. You as a trader, you now employ your system, your own system, your trading system. And now that will include, if you trade retail, breakouts, draw a trend line, wait for a retest, enter buys. If you trade ICT, for example, Judah swing, going to your lower time frame, wait for liquidity of maybe Asian or maybe a previous session to be taken, break of structure, enter longs, and go. I've just given you an overview of what I see is happening in this market. And you guys know, if you follow even my previous market analysis and review, I barely get it wrong. Most of the time it's around 80% plus. I barely get it wrong. Because even what I told you guys yesterday, I'm still very bullish on Nasdaq. I said that yesterday, and I'm still on the same on the same thing. The fact that we dropped lower, this was just manipulation, and you as a trader, you are supposed to be looking for any setup that was giving you any bullish vibes. That's what you are supposed to be taking. But since as you can see, even for the break of structures traders, for example, those who are waiting for break of structures above, there was no structure that was broken here, literally. Maybe this one here, maybe this one, but this was also not really a good one because later on it came. Yeah, this would have worked because this low is not okay. Literally, it was very close to be tapped, but you are supposed to be looking for signals for buying. Okay. So that being said, I want us to keep on going higher on Nasdaq. Gold has hit all-time highs, and I gave that analysis from last week. I told you guys like start looking for buys. We are targeting all-time highs. It's in a video in this channel. I think it was maybe episode 2 or maybe episode 1. I'm not really sure. And the same thing with Nasdaq. So something that also supports our buyers or buys is that we've started creating bullish fair value gaps, inefficiencies, these bullish inefficiencies. You see them. This shows that price is interested in going higher. So what we have to do is that wait and see if we get a retracement below them, then we buy as we go higher. So as of right now, actually, me, I've not taken any trade today. I'm just watching the charts. I'm just seeing them because the moment I checked on charts, I realized that yesterday the price really moved too much. Like it really overdid itself. So with that being said, whenever there's also news coming, for example, this week we have a lot of red folder news that we have to be careful with, and just be careful. Price is kind of accumulating itself. We are likely to be dropping down maybe in one of the news down, then we go higher. So that's on Nasdaq. So whatever you do, look for opportunities for buys. But if you get an opportunity to sell, yes, you can sell, but remember that will be a low probability trade. So keep that in mind. Let's take a quick look on gold. Gold, on the other hand, has been bullish, just the way I've been telling you guys since last week. As you can see, we've been going high. And remember, last week, I started giving this analysis. We were down somewhere here. Yes, we were down here. And I told you guys that the reason why we came down here was to fill this bullish daily fair value gap. And you see how price, respected it, and we started closing back in, and after that it was a rally higher and higher. And I told you guys we are targeting all-time highs, these highs here, and that has been what has been happening. The only problem with the gold is that it has not been giving entries literally most of the time, because when you expect it to retrace and give you some entry, it just goes higher and higher and higher. As you can see, instead of retracing, it just leaves this and go higher. Instead of retracing, just leave this and go higher. Instead of retracing, it just leave over here. It did the same thing. Like, I've been waiting for it to have some retracement, because at the end of the day, we're supposed to be buying in discount. I don't like buying in premium. I'd like price to come into discount. So for example, in this day whereby I was waiting for buys here, if maybe I was in this zone right here, and actually I did take some sales. If you guys can remember this episode here, I was slightly stopped out here before price came into my zone, delivering price there. And if for example we are trading here, uh you want to note where the premium and discount is. If for example we tap this one right here between this swing high and this swing low, this is our equilibrium and this is our discount point. You see, price only came to the equilibrium, then start going higher, but I wanted it to drop lower, tap this liquidity here, come into the discount level, then we move higher, but that never really happened. So I felt like this was a low probability trade, and that has been what has been happening with gold. Apparently gold is still going higher. That's it. I'm targeting maybe likely next year, maybe January or February, we might be we might be heading towards 4,000, and likely next year, yeah, we're gonna be hitting 4,000 in terms of price of gold. So that being said, still look for buys. I don't really support anything to do with the sales with gold right now because it is extremely bullish. And the reason why I don't usually like trading gold when it has reached, or any price action when it is on all-time highs, because you don't know when the retracement is gonna be happening. Because right now we are on premium. So when we just keep on buying on premium, buying on premium, because at the end of the day, price must come back and balance this inefficiency you're seeing here. So not unless we have a clear structure that now we are in a down move, we are going back to rebalance something before we go higher. meaning that would like to see maybe this candle close back in on the previous one. Then you move into maybe hourly time frame or maybe 4 hour time frame. We start seeing bearish structures like bearish PD arrays and so on. Then we start to know placing ourselves for sales, and that simply means that we have liquidity to target below. As you can see, we have liquidity to target below here. That you see right now, we're not sure of what liquidity we're targeting above, and that's where the problem is at. You don't know what liquidity you're just targeting all-time highs, and you see trading price blindly like that is kind of tricky. It has its own consequences. That's why I don't usually like trading gold or trading any other pair that has hit all-time highs, because you don't know where it's gonna be stopping out, because at the end of the day retracement must happen. And as you can see, these are signs of retracements. You're seeing this? These are signs of retracement. So price is likely to be, today we are likely to be closing back in. And after we close back in of yesterday's candle, then tomorrow, that is Thursday, we're going to be having reversal Thursday, and we start going lower, and likely we're going to be start having bearish structures whereby we're going to be closing below this uh this swing low here, and maybe having some bearish fair value gaps and PD race and so on. So then we start selling, and that's just it for gold. For me, gold right now is a no go zone. I don't really like touching it right now, and if I get a chance to trade, maybe I'll be just in and out, very quick in and out, not holding for too long. And on the other hand, I'll be waiting for buys on Nasdaq, and still there's nothing new. There's nothing good to trade here. As you can see, on it's been just accumulating the whole of Asian session, and you see right now we're kind of starting to have some expansion above, and still not really a good price action. So I'll have to wait and until maybe New York and see what's happening. Then that's when I will engage price. That's it for today, guys. Hope you like the content. Like and share. I will continue reading price together in the next episode. Cheers.